Welcome back. Well, as we pointed out, the market is not doing much at all. In fact, 17,325, that's where it seems to have made its focal area at this point of time because continues to hinge around that mark. Separately, in terms of stock-specific action, other than Macrotech Developers, not big movers on the upside. Yes, of course, RVNL is one stock which has been doing well. NBCC is also seeing some traction now, 7% higher. Angel Broking, GE Shipping, Quest Corp are some of the other names that definitely deserve mention. We were also talking about some of the stocks which are actually buzzing on heavy price volume action. So let's pull some of those counters as well. And see, because starting with Ambuja Cement as well, that one has seen a three white soldier candlestick pattern. It's broken out of the 12th session consolidation and has formed a bullish engulfing pattern. So Ambuja Cement is the stock that we should pull up. That one from the Adani pack is actually doing quite well. And today, entire Adani group is doing quite okay. Quest Corp has formed a Morningstar candlestick pattern, snapped the 6-day losing streak, and look at the volumes on that one. For Quest Corp, it's almost 6 to 7 times the usual average that we have seen. Coal India too has broken out from a horizontal resistance zone, and it's the biggest single day gain in 1 month that we have seen in Coal India, and that's been the recommendation coming in from our chartists as well. Naresh has been quite positive on Coal India earlier this morning as well, so that stock has definitely given good returns to the investors as well. But will good returns come for investors in the month of March? That's the key question that we're asking, because in an interesting analysis, Sharad has found that the Nifty has not given 4 consecutive months of negative returns in the last 2 decades. But what happened when the Nifty was negative for more than 3 months, which happened earlier than 2 decades? Sharad and Kunal are now joining us with the explainer on that.
Well, yes, the focus is there on the Nifty returns, and this is after every 3 months how the changes happen. And of course, the last 20 years data we have taken out. Kunal, 9 times out of that negative returns, 3 straight months has come in, and out of which 8 instances which are there. Interestingly, the 4th month has turned out positive, but there are certain numbers to it. Of course, the average return comes after the third return. After the 3rd month comes at around 7%, and the highest being almost 15% seen in the month of April itself. And the Nifty has already fallen, Kunal, by almost 6.6% over the last 3 months. So what will it be for the next month, and which is the March itself? That is something which we'll be watching out for.
But a counterpoint to that, Sharad, is that historically, when you look at this data from before the last 20 years, which means from 1996 to 2001, the picture is completely different, because in that time span, there were actually 3 occasions where the Nifty fell into a series of greater than 3 months of correction consecutively. So there was a period where, for example, in the year 1996, where the index corrected by more than 5 months. 1998, 2001, we corrected by more than 3 consecutive months on the downside. Now the interesting bit over here is that when the markets have gone through a correction, so as you can see in the year 1996, the Nifty gave a rally in the month of June, then July, August, September, October, November. These 5 months straight were negative months, and you'd be surprised to know that the index has fallen by more than 35% in the 5 months of time span. Then we go to 1998, a very similar kind of a chart over here for the index. We managed to rise in the month of April. May, June, July, August, these 4 months is where the market saw a very sharp correction. Again, the correction from the top was more than 32% in the span of these last 4-5 months. And same was in 2001, where the index saw a sharp correction. Again, starting out from the month of May, which was apparently a green month, then June, July, August, September, these 4 months, the markets corrected very sharply, again by a span of 30%. So far, as you can say that yes, the index has fallen by just 6.5%. But in case if the correction extends to 4 months, then history is not at our side. The only shining part, or the only good part, which is available looking at these last 3 occasions, is that in the year 1996, 1998, as well as 2001, whenever the markets have hit these kind of 4 or 5 consecutive lows, those years the markets have made a major bottom, and those bottoms have not been tested for years to come by. So we can just hope that probably 2023 is a similar kind of a year.
Well, Kunal, that's an important thing, and we just hope that this year, 2023, is a major year for the bottoms coming up, and hopefully we start a bull run over here.
Okay, so interesting data points coming there. Let's see whether that 3 month or 4 month, which side does it really pan out. But Nikunj, as we were discussing, there were event-based, reasons why the stock and the stock markets had fallen for the 4th consecutive month. So even at this point of time, it's nothing to say whether the market is, evenly priced or not, whether there will be a runaway rally in the month of March or not, because as you also earlier pointed out, there's no trigger or participation in the market, right?
Initial trigger could be anything. I mean, the war between Russia and Ukraine settles, the trigger comes.
But it's about sentiment and momentum, which is just
that
lacking.
comes with price. See, sentiment is a function of participation. Participation is a function of how much you can see in terms of future returns. You need to buy bargains in the market. Is the market available at a bargain price? No. Are there stocks which give you a promise of 15 to 20% CAGR earnings return? The answer to that is yes, plenty of full. So this is a market which will truly test the temperament of a patient investor. Equity investing, Anisha, is not about linear returns. The 10% CAGR returns what we've seen. So example, the 40% return what we've seen from COVID,
from
it looks like pre-COVID, it is a CAGR return of what? 13-14%? 13-14%. Imagine you get another year of no return. This year we get no returns. I don't know. I mean, if you don't get any returns this year, then suddenly that 40 will start looking below, nearing 30. Then the chances of a bumper 2025 becomes automatic. Could markets get nervous in the second half about, oh, election is around the corner? Who knows? All I'm saying is right now, is it time to, there are times in the market where you say that I'm going to be looking, the margin of safety is so strong that I'll bet my house. I don't think you're there. But is this a market which is giving, which is at a frothy level where things are going to be just, they'll come down like a Humpty Dumpty from a top of a wall? I don't think so. So this market will test your temperament, patience, it will labor your, time here. And in equity investing, what I've learned from the gurus and the mavericks and the wealth creators is, you don't need IQ. The only thing you need is PQ, patient quotient. You don't need skill, you need patience.
It's definitely testing the patience because even while tracking the market, it just sounds so boring, listless that we have been in that range.
25 minutes or 25 minutes of 3:30 still left, right?
Yeah,
in a bull market, you say, oh, it's already 3:30. Now we are saying, why not 3:30? Today is Thursday, tomorrow is Friday. What will we talk?
What will we talk about? Let's ask Mayuresh Joshi. Mayuresh, we're talking about how you don't need IQ, but you need the patience quotient, PQ. Do you think that holds true?
Oh, absolutely. Afternoon, Avan. I think these markets have been testing for the last few months. And probably, I think, going by the way in terms of how the macros are probably shaping up, the testing phase for the markets might still continue. I'll give you a case in point. I think some of the emerging markets that we track at William O'Neill, KOSPI as an example, the Korean index, a couple of weeks back, it hit a confirmed uptrend, which means it was in fine petal. And suddenly you had a clutch of down days into the market. And suddenly you're seeing that market into a huge amount of pressure at this point of time. European markets surprisingly holding up. The way the bond yields are shaping up in the US markets going beyond 4. I think there is a lot of nervousness out here. So yeah, I think the nervousness might continue based on all these factors. And therefore, I think you might need to be a little bit more, you might need to have a little bit more patience into these markets as well.
Naresh, you may use the word patience, but somehow for trader, it's like this jail experience. What to your mind, Naresh, will be the out of jail card? Monopoly may remember that game card, out of jail card, corner wala.
So, there are times where we have to accept that markets will not be favorable or just boring. The jail card, as in, the trigger which would come is from the, US markets. If that can turn around, say the dollar index cracks off, or you see the 10-year yields going down over there, that could trigger. So eventually that has been the problem for the last, few weeks, at least in Indian markets. If you look at European markets, they're at all-time highs. You're not seeing a problem in the emerging markets. We've seen a correction only in the US markets, which continues to be a problem point. So any change in, sentiment in the US markets could actually trigger a good move.
Okay, so that's it, a word coming in from Naresh, but let's get the closing trades out of the way as well. Kunal, you go first. What's the trade that you are executing at this point of time?
So I'm picking up a non-F&O stock. Vector Foods is something which looks extremely attractive on the charts. Gone through a rally phase of consolidation and now a resumption of a rally back again. So it's a stock which I'm recommending to buy as well as looking to buy.
So what's the upside on this one that you are tracking? Where's the stock? Let's pull up the chart and look at the 6-month performance or even a 12-month performance of Mrs. Vector. Standing at around 530, has seen quite a bit of run-up actually of late as well, 53% higher in the last 6 months where the market has done absolutely nothing. Kunal, further upside to what levels?
So I believe at least 580 to 600 could be a very possible target for the stock.
Okay, so $50 that can be made in the near term itself on Mrs. Vector. As far as Naresh, what are you tracking? Don't tell me it's Coal India again.
So it's Coal India again. So it's in this market, it has been the best way to trade has been to play the places where you would like to hide. And those are the places which have not corrected. So whether a power grid or an NTPC, a lot of PSE stocks. So Coal India is the one which gave a breakout today. So that's the stock which I would expect to take some leadership in the near term, go towards 230-35 levels.
All right, no surprises there when it comes to Naresh's trade. That's Coal India, and you've got Kunal who just flagged off Mrs. Bector Foods. Meantime, just want to also highlight the outlook on HAL or Hindustan Aeronautics. We spoke about how the company has been at the receiving end of a lot of orders, and you've got brokerages as well across the board that continue to remain fairly bullish on this one, saying that given the fact that the order opportunity looks very strong, despite the fact that maybe Q3 was a bit soft or a bit of a miss, the long-term potential still remains strong. Mayuresh, if you had to pick and choose within the entire defense space, which are the stocks that you would flag off?
So I think HL, Cochin Shipyard, rather Mazgaon Dockyard had an amazing run over the last few quarters. Now the order books are swelling up for most of these companies at this point of time. The revenue visibility looks extremely strong. So I think margins were under some sort of pressure in the quarter gone by. A few companies had semiconductor issues. A few companies had EBITDA margins because of higher inventory kept through. But a large part in terms of the indigenization program, expectation in terms of more orders coming their way, should probably hold them in good stead. So yeah, I think stocks like Mazgaon Dock, if they retrace back to more manageable levels, look feasible, and even stocks within the broader space, stocks like a BDL probably looks feasible at this point.
Okay, Mayuresh, point taken as far as that is concerned. Let's just quickly take stock of what else is happening in the market. Quest Corp, heavy volumes on that one. You also have Adani group of stocks which are doing quite well. GE Shipping is also showing traction. And today, if you look at these stocks which are hitting all-time high, Sonata Software is also right there up on the list, 4% higher. Kunal, your take from the entire IT pack and even the Sonata Software and a couple of other IT names which have been doing well today. I mean, IT index is down, but then at least from the broader markets, there are a couple of names which are standing out.
Yeah, Sonata Software looks attractive. I think this is the fourth day of strong volumes for the stock now, even though the prices have gone through a very consistent up move from 700 to now 798, 800 approximately. But then this move has not come into effect in just last 2 or 3 days. It's taken more than 7 or 8 trading sessions for the stock price. And in those 7-8 days, it's just been 4 strong days where the stock has seen some good volume patterns. So this could probably be an indication that there are specific pockets within the IT pack which have been looking attractive. These stocks have outperformed the overall IT index as well as the large cap peers and the mid cap peers, and they are the ones where traders are still looking to buy. Stocks like I think Persistent, Reddington, many of these stocks have also gone through a big round of outperformance already in the last 4-5 months comparatively. But then again, the question is that whether the entire IT stocks sector is making a comeback. There are still a lot of questions on large cap names like Infosys, which has still been unable to find any kind of a major recovery. HCL Tech has been just trading about that 1100 mark. TCS at 3,400 odd levels broadly. So the larger cap stocks are not doing any major kind of a price uptrend. That's why the IT index is more dependent on these mid cap stocks trend show any kind of a trend. But largely for the IT index, no major kind of a trend.
Just a point on the large cap IT that you flagged off. Tomorrow is the analyst meet of Tech Mahindra. We have seen recently a lot of buzz around who the new CEO is going to be. So I'll expect that stock to remain in focus tomorrow as well. Today it's down by around 1.5%, but we'll get you the latest from that analyst meet as and when that happens. But Mayuresh, Kunal was also talking about that there is a bit of lack of clarity as to what's happening in the IT sector and what the outlook is. What's your take?
So to a large extent, I think the stocks did a fabulous move over the last few weeks. Now, what is happening in terms of more induced rate hikes in the US market, that will probably pull down a lot of efficiencies probably in the retail banking manufacturing sectors as far as the US market is concerned. And therefore, in that extent, the whole aspect in terms of how these companies might get more order flows, or is there a scenario of more muted order flows, is something to be seen. European markets are very, very soft because most of the managements are pointing towards that. The attrition issues and the margin issues are largely behind as far as the employees are concerned for the IT sector as a whole. But a large part in terms of constant currency guidance, if you probably looked at even Accenture's or Cognizant's guidance, the large part of the element is that it is under stress or the guidance has been revised downwards. So I think IT sector might be in a sideways mode going forward. If things worsen off, then what we believe in the next few quarters, there might be further expectations of muted growth going forward, and therefore we equal it on the entire sector.
Meantime, Mayuresh, just wanted to get in a quick call from you as well as what the outlook is when it comes to Z Entertainment, because no doubt, it's been a very choppy roller coaster ride for the counter with respect to the case that was filed, the insolvency proceedings, the removal from FNO. Is the next key trigger definitely going to be the merger with Sony that could really turn things around?
Yes, I think that is one aspect to it. The other aspect, obviously, is with the kind of legalities that they have been drawn into related to the NCLT. I think what kind of judgments come through, I think that will be a defining factor. But there are no two ways about it, Avan. I think if you probably look at Z, if you look at Sun, if you look at TV18, I think the numbers generally were very, very soft. Specifically, the ad revenue growth. I think the kind of numbers in terms of degrowth that you're probably looking at in terms of ad numbers have probably got muted, and in a slowing environment can remain muted as well, getting offsetted by stability in subscriber growth numbers. But I think the OTT aspect for most of these players is expected to still carry a drain in terms of cash flows. So there might be a momentum trade if the order probably comes through in the next few weeks or months in favor of the company itself. But numbers prima facie, looking at advertising, probably we're looking at how the subscriber growth will be very, very soft and muted, very, very stable, might see that the earnings expectation for the next fiscal year remains muted. So I think, again, sideways moves for all these media stocks as well.
Okay, that's the take coming in. But let's get the BTST ideas also out of the way. Nuresh, you go first. What makes it to your BTST list today?
First is a buy on Coal India, stop loss 221, target 230. Second is a buy on BPCL, which is trying to make a reversal, a stop loss at 319 and a target price of 328.
All right, what about you, Kunal?
So the first one is about Care Ratings. The stock is making a very strong comeback. In fact, it's a stock which has been able to protect its 200-day moving average broadly. So that's a buy, as well as a 50-day moving average as well. So that's a buy, expecting this previous high to be taken out for Care Ratings. Targets of 710, stop loss at 650. And the second would be a buy on Vector Foods. Again, a classical breakout coming back into the stock after a phase of minor phase of consolidation, making a comeback again for targets of 600, stop loss 500.
All right, stay on with us. A quick break. Be right back. Last 15 minutes of trade will be tracked. $17,320, so ending towards the lowest point of the trading session. Weekly options expiry today, but not big volatility, at least in the last 20 minutes or so, though we have been trending a tad bit lower. On the losing side, not new names, but Triveni Turbine is down about 7%. Yes Bank has come under pressure, so that stock is sitting with a cut of around 5%. And Siemens too is down 4% because that clearly has lost out on that order of the entire railway locomotive that we have been talking about. So they are out of the fray. So that's why you're seeing the negative reaction. Separately, you also have Finolex Cables, Escorts, etc., which are on a tad bit of back foot today. And of course, from the frontline index, it's IT as well as some of the banking heavyweights, which are contributing on the downside. So some of those stocks are definitely in the spotlight as well. But let's talk about the automobile sector as a whole, because yesterday we got the sales data for a lot of companies, and overall view is that the commercial vehicle space is doing well. The passenger vehicles are also okay, but two-wheeler is just showing a mild sign of recovery at the moment. Let's listen in to what the managements at Emami as well as Maruti had to tell us.
First of all, for the tractor segment, this has been one of the best years so far. The tractor industry is likely to grow upwards of 12%. So far, YTD, the growth is 12.1%. And with only month of March left in this fiscal, we are looking forward to this kind of strong growth to continue in the month of March. So even though rural demand has been tepid for certain segments of the industry, but for tractor industry, this has been our best year ever. Having said that, clearly looking at the way ahead, what indications we are getting is that there is a likely of El Nino coming in the monsoon of this year. However, still this is very early days because more data needs to be processed. IMD has come up with the latest outlook saying that by middle of April, they will have better data to say what kind of El Nino will be there. Whether the El Nino will be weak, moderate, strong, these are the kind of signals that we need to monitor. So right now, there is a higher probability of El Nino happening. But what is the intensity of El Nino? I think that is what we need to monitor. So I would still say these are early days. By middle of April, we'll have a better idea.
See, yes, so price hikes are actually a function of cost structure. We keep watching how the costs go. Two major components, of course, which we keep watching, because 75 to 77% of our cost structure pertains to material cost, and material cost movement will have a big impact on our overall costs. So there are some uncertainties. Although we have seen a relatively softening of the commodity prices in the recent past, but still very high compared with what they were earlier, and therefore the pressure on profitability is there. And the second thing is that the RD norms, which will, and the OBD2 norms, which will come into force from 1st April, will entail a change of specs of the vehicles. Some of those models we have already changed the specs, and that of course entails additional costs. So we'll have to see the impact of all that and then take a considered decision. At the moment, we are still deliberating. We have not decided either way.
Okay, Kunal, let's get in a view on Rail Vikas Nigam and NBCC on the charts, purely because they're clearly bucking the trend and buzzing away in trade. Yeah, so today's rally is quite attractive for these stocks. I think RVNL, and there are many other railway stocks like Titagarh Wagon as well, which were doing pretty well for themselves. But I would not be too much enthused into buying these kind of one-day rallies, because there is always a possibility that there would be some sort of a profit booking which come by to these names. So maybe traders can carry forward their position for tomorrow for a minor kind of an opening pop. But then I think at best I would probably expect another 2 to 3% max on the upside for these stocks in the next couple of days, and then a profit booking wave has to come back into these stocks. So it all depends on the time frame. For someone who's looking out for 2-3% and a short-term trading pop can venture into these kind of names, but ideally one should avoid these kind of stocks. But if you're taking a short-term bet, you would want to take a bet like Macrotech Developers that gives you 20% return in a single day. That's the kind of move that we are witnessing at this point of time on Macrotech Developers. Naresh, what's happening here?
So it's been a stock which actually fell very quickly, and that was also the question, what's happening here at that time. Could not understand. The stock fell from 1,000 rupees almost a week, say 10 days back, down to 730 rupees. And now we are back closer to those levels. So it's very difficult to take a call why the stock fell out of nowhere. And if you remove out this volatility of the last 2 weeks, the stock has been sideways for the last 6-8 months, wherein 1,000-1,050 was roughly the range for the stock. So difficult to say what's happening. Maybe there was some, say, change of hands or some block deals which happened. But tough to take a call. It's only when we start breaking above 1100 it comes on a technical radar. Because the buzz in the market is that there was a large seller that was offloading stake on Macrotech Developers, and that selling seems to be over. And that's the reason you are seeing that supply pressure getting out of the system, and that's working out. But for now, Naresh is not going to bet big when it comes to Macrotech Developers as well. Quickly, we just have 2.5 minutes left, and Mayuresh just wanted your word as well on Macrotech Developers. Would you be a buyer?
It's a strong move, very frankly, Anisha. And what you've probably seen in terms of the guidance that they gave last year, they probably achieved that. And they're still giving on their investor day a very reasonable amount of growth for the next year itself. I mean, in the rising interest rate scenario, where a lot of investors are on the fence at this point of time, such a strong guidance probably pinpoints to the kind of moves that we've probably seen. I think it's a little bit of an exaggerated move at this point of time, so we'll wait and watch for a full back on this.
All right, Mayuresh, good to have you on board. Thanks much for joining in. Time to wind down the markets then, and listless pretty much with a definite downward bias is the way to describe today's trading session. We go home with a cut of 135 points. And for the Sensex, we're down about 500 points in trade. You've got the broader markets today, which are quiet in a sense. They have marginally outperformed, given that the cut isn't quite as harsh. But that breadth really telling you the story, skewed firmly in favor of the losing side. Blame it on IT, blame it on auto, the Nifty Bank. The fact that outperformance is nowhere to be seen, and even the media index is in the red. Real estate, yes, that's managed to pretty convincingly buck the general trend, and then PSC, and that could largely be attributed to Macrotech. So here are your big losers in trade. Maruti, Axis Bank, TCS, M&M, Infy, Tech Mahindra, SBI Life along with Tata Motors, ITC as well. Adani Ports, Enterprises, Gain, Coal India in the green, BPCL along with Power Grid. Those are some of the smart movers in today's trading session. Well, without a doubt, you've had Macrotech Developers surging in today's trading session, largely on the back of the outlook from their management meet, which has been pretty optimistic. Railway stocks are in full steam, the likes of BHEL, RVNL as well as Titagar Wagons. You've got also a lot of those Adani Group stocks on the back of the Supreme Court order on the Hindenburg case that are abuzz in today's trading session. Meantime, just checking in on some of the other movers within the broader markets as well as some of the other newsmakers in trade. HAL, for instance, MSCI inclusion it's one of the contenders, and there's been a procurement of some trainer aircraft as well. That's kept the stock in focus. You've got NMDC. Analysts are talking about how the volume guidance mix could hurt valuations for the company as well down the line. So those as well are some of the newsmakers. Anyway, within the broader universe, there's names like Triveni Turbine, Siemens, Zensar Tech that are under pressure, while Rail Vikas Nigam, NBCC, Quest and Suprajit Engineering flex their muscles. Okay, that's all the time we have then on this leg of closing trades. So from the team that put the show together, thanks so much for watching.